Hey there, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to take these opinions, form your own financial conclusions, and make your own financial decisions. Today is Wednesday, January 31st, 2024, and this is Blockhead Traders Weekly. In this week's episode, it is just myself, and I am going to talk about reeling it in. So last week, I laid out 3 earnings trades that I was going to take this week: AMD, StarBucks, and Wolf. And I did end up taking all 3. I posted them all in the Discord, and in this episode, I'm going to show you how each of those played out. But before we get to that, I want to give a shout out to our Discord, link in the description below. You can hop in there, say hello to myself, some of the other Blockhead traders. Love to hear what you're trading, love to hear what type of content you want to hear about. You'll also find a link to thetagang.com/sprocket888, where I post each and every one of my trades, the good, the bad, and the ugly. Lastly, this is available in an audio-only format wherever you get your podcast. And if you can't find it there, let us know and we will get it there. So let's hop to this week's content. All right, so I told you this is about reeling it in, a review of the 3 earnings trades that I laid out last week. And so far, so good. The third one technically is on the hook, and we're going to start reeling it in tomorrow. The first 2, I was able to pull into the boat today and go ahead and ring the register for a profit there. That's AMD and StarBucks. Wolf is out there. The earnings were after the bell today, so I can't close that option out until tomorrow when the market opens. But I'll show you where we stand on that as well today, and that's so far looking good. The fish is fully on the hook, and we're gonna reel it in tomorrow. Hopefully, it doesn't break loose or go south in the pre-market or during the trading day tomorrow before I close it out. All right, let's look at the StarBucks trade first. And I like the best way to kind of graphically show these to you is to really kind of lay out, I call it the Flappy Bird chart. And I call it the Flappy Bird chart because I'm playing a strangle on all these earnings, which means I'm selling a call and I'm selling a put. So I need the earnings announcement to stay within a particular range. And if we kind of pop over here, I have this chart on the 2-hour because it helps show you kind of aftermarket. But really, in the grand scheme of things, we're talking about just a day's worth of trading. And so I'm going to zoom in here to basically when I put the trade on. Now, this trade I actually opened up at the end of the trading day on Monday, the 29th. So I wasn't sure if I was going to be able to get this on during the 30th. The earnings announcement was after the bell on the 31st. But because I wasn't sure if I would get that availability in there, I went ahead and put this trade on the 29th, just at the end of the day. And so what I've got here is the 2 strikes that I chose. I went with a 20 delta strike, and so the bottom side was about $88 and the top side was $99. And so as long as it stayed between $99 and $88, I was looking for some volatility contraction. And, you know, I'm going to show you a slide of where the profit came in for this trade and AMD because I rung the register on those. I was able to reel those things in just to show you the power of volatility contraction. So these options all expire this Friday. So I didn't drag this out to Friday. It basically comes out a little bit more because I closed these out today after the earnings. And what you got right here is you kind of start running up here. You got the earnings announcements. You got some price action that banged up pretty high. The blue here is the after hours, and then this is the pre-market. This orange is the pre-market today. You know, we didn't really breach the strike. I guess in pre-market, we might have breached that $99 just ever so slightly. The market opened, StarBucks came off, and this is a hey diddle diddle right down the middle. You can see that roughly we closed today very close to where we were when I opened the trade on the 29th during the market. So really a big nothing burger. And this just goes to that overextended volatility where that uncertainty really stretches out, where that kind of plays in from a standpoint of earnings and people just kind of overstating the fear in there and where it will actually kind of end up. like I said, it was an $88 put, $99 call. You can see that right there, opened on 129. I collected $1.75 or $175 from that. Took about 2.2K in buying power because these are unprotected. And I was able to close this out today for $8. So I was able to buy the exact same options that I sold on Monday. I sold them for $175. And those options today, after the earnings announcement, were worth $8. And it's that's because volatility absolutely collapsed after earnings. The time premium is expiring this Friday, so the theta decay was just enormous on it, which means that I paid the $8 to close the strikes out. Now, the reason I close them and I don't ride them is because anything can happen. So as soon as you got that profit booked, take it, put it in your wallet, put it in the bank, pull it in. You got to close these out. Don't let them ride into expiration. Don't just, you're basically risking. At this point, I had $167 in the bank if I would have closed it. And so do you want to risk that $167 for $8 more? No, not at all. And so my threshold is a 50% profit. We were well over that today because this was just right in the middle, going absolutely nowhere. And so that is effectively an overnight return of 7.6% because I collected $167. I put up a buying power of 2.2K. And yes, technically, I guess it was 2 overnights because I put the trade in on Monday. But that's really what I'm talking about, where this volatility contraction is just so. The next one that I traded was AMD. And so let's go over and look at the Flappy Bird chart on AMD. Again, this was like StarBUX. Earnings were the 30th after the bell, but I wasn't sure if I was going to have time to put them on the 30th. So I opened these up on the 29th at the end of the trading day. So again, this is a 2-hour candle chart here. You can see where I put the earnings on. Again, I went with a 20 delta here for the AMD trade. And I actually did just one contract of here, 20 delta. That stuck me on the low side at 162.50, and on the high side, it was a call of $200 strike. And so again, I'm looking for this thing to stay in between these Flappy Bird columns, and the earnings announcement came out right after the bell. We actually jumped down in and breached my strike. So this didn't look amazing after the market closed, but you can see in the pre-market we started gaining on AMD. We started gaining, and sure enough, yes, we're lower than where we were when I opened this trade from an underlying perspective, but we had gained back well above my strike. And so this one it did cost me a little bit more to close this put because volatility did contract a lot. But again, I wasn't right in the center of where I opened it. So I was biased a little bit closer to that put strike. So it was a little bit more expensive for me to close. But I'll show you here on the next chart where that actually came in from a profit standpoint for me. And so let's look at that. And you can see I opened up the AMD strangle. Again, the earnings were the 30th, 20 delta strikes, 162.50 on the low side, 200 on the high side. I just sold one of those contracts. I collected $4.58. So that's because these are on times 100, $458. Now, to close out, that $200 call was pretty much dirt cheap. I think it was like $2 to close the call. And then to close the put was basically, I think, $74 or 74 cents. So again, a little bit more expensive than that StarBUX to close at $8. But honestly, that same strike that I sold just 2 days ago for $458, I closed for 76, which means I got to keep the difference of that. That's a net total profit of 382 on the AMD trade, which is quite a bit more return on capital because the AMD trade took about 2.5K in buying power. So if I divide that out and I take the 382 divided by 2.5K, you see that's about a 15% return on capital in basically overnight. And this is the real binary event of earnings and the power of that volatility contraction and just rapid time decay because these were expiring on this Friday. All right, the last one I want to look at, this is the one where I told you the fish is on the hook and we haven't quite reeled it in yet. This is Wolf. So Wolf Speed, this is the one if you go back to the video from last week, I said, I have not a clue what this company does. And after earnings, I said, you know what? I really wonder what this company does. Looks like they make kind of like wafer fabrications for EV cars and things like that. So I guess they're tied to the EV space a little bit, and different kind of technology there for some of the chips and what have you that go into those EV production vehicles. Honestly, doesn't matter. Because like I said, when I opened this trade, it was, hey, look, I am looking for that overextended volatility going into earnings, looking for that rapid contraction. And this fit the bill of in the 100th percentile of volatility. So this particular trade, I got a little confused on the earnings, and I wanted to open it basically the day of the earnings because they were going to report after the bill, but I was one day off. And so I actually opened it yesterday, just before the close of the day, rather than today, because I actually thought their earnings were yesterday. Doesn't matter. You can see right here their earnings were after the bell today. We kind of were biased more on the low side because I did open up the trade a little bit early. Ideally, you want to open these earnings trades the day of earnings, basically the last trading day that you can before the earnings, do it then. So if it's a before the bell announcement, you want to put it in the day before. If it's an after the bell announcement, you want to do it the day of earnings. And the strikes that I came here, again, 20 delta is where I went at with this. That put me on a $30 on the bottom side, and the top side was $42.50. So $42.50 on the ceiling, $30 on the call side. They reported they have gone down. They're challenging that put. They have not breached it. We'll see what happens in the pre-market trading tomorrow and then into the market day. I am looking for just a repeat of the SBUX and the AMD where that elastic band is super stretched. We get that zing after hours, and we're going to start coming back to a mean reversion. That's what I'm going for here with the Wolf trade. And if we go ahead and look at where does that chart stack up from a return standpoint, like I said, this is still in flight. We're going to see if I can reel this thing in. But that 20 delta, $30 put, $42.50 call, I actually did 4 of these. Each of these I sold for $1.80 a piece, or $180. So I collected $720 in premium. Now, I don't know what I'm going to be able to close these out for, so it's a big question mark. But if we stay in between those strikes, this likely will return at least right out of the bell, probably a 50% return. And if we kind of go into the trading day, I probably can expect around a 70% return, depending on how far away from that $30 strike we get. If we go closer to that $30 strike, I won't be able to close it for as much profit. And I might ride it out closer to expiration and look to roll the put before expiration if we start breaching or not really kind of collecting there. And again, this is all TBD because I don't know how much of this 720 I'm going to get to keep. But if I was to keep it all, that would be a 29% return on capital because this trade I had to lay out only 2.5K in buying power for these 4 contracts. That's largely because this is a much smaller underlying where the trade price was, $30, $33, the underlying. And if you notice, the buying power on the previous trades of AMD and SBUX were higher. That is because that buying power needed was higher based on the underlying price of the stock combined with the volatility. So we'll see how this one plays out so far. But so far, I've put 3 on. 2 of them were just lights out winners. We'll see where the third one fits in tomorrow. So that brings us to the end of this week's episode. Like I said, earnings trades are one of the favorite trades that I like to put on because it's kind of as close to instant gratification in kind of the low, slow theta burn trade. So a lot of times I'm putting on the 35 to 45 days to expiration trade, and I'm looking for that slow chug, burn, decay of theta, volatility, contraction. And you don't really get that rapid deflation. So you'll put 35 to 45 days to expiration, and you're probably going to hold that thing down into the 21 to maybe 14 days to expiration. That's probably when you're going to start to hit your profit targets. It's just a boring hitting single after single. You really don't get any sort of grand slams. Earnings is the exact same mechanics behind it. It's that theta decay, volatility premium. The difference is it's with an accelerant. It's with a binary event of earnings, and all of the uncertainty, all of the premium is pumped up because of that earnings announcement, that uncertainty. And as soon as that uncertainty is cleared, the volatility just absolutely collapses. The premiums disappear. You can buy back your positions, close them out, and get a profit. And so that's what I love about earnings is it's the same mechanics that I use the rest of the year when earnings announcements aren't going on, but you kind of get this nice fast forward, quick action, instant gratification because you put your trade on the day of the earnings before the bell closes. You get the earnings announcement and you find out pretty soon if you're going to be pulling something in or if the fish got away with your bait and you're going to be stuck with something through assignment. And that's an important thing to remember in these earnings trades is it's not always fine and rosy, hey, diddle down the middle, get to close them out for massive gains. There are times when you are going to breach your strikes and you will face assignment. And you got to be okay with that assignment. Like none of these trades have I opened if I was not okay with assignment. I will take assignment. Now I'll try to avoid it. I will try to roll that before expiration, but depending on how far in the money you get, and when I talk about early assignment, I'm talking 10, 15, 20% in the money. That's really, really where you get that really high early assignment risk. But you have a chance to roll it, collect a little bit of premium on that. Otherwise, I'll take assignment on these things and I'll turn around and sell the opposite, whatever the assignment was. If it's assigned long, I'll turn around and sell calls against it. If I'm assigned short, I'll turn around and sell puts against it. And so it really just depends on what it is. I just take it and I say, okay, great. I've got this thing now and I'll work on trying to milk some premium out of that and basically get assigned away. So if I get assigned the shares long, I'm going to sell calls until I get them called away from me. If I get assigned short, I'm going to sell puts until I get to put them somewhere else, to somebody else through assignment. And that's really these, I know it's the same thing over and over again in these episodes, but I think the repetition and the laying it out there is exactly how my trades pan out. Just prove that it's really legit. These are real results. And you can always pick them all up on thetagang.com/sprocket888. Hopefully you find this somewhat interesting. Otherwise, hopefully drop us a line. Let us know what type of content you want to hear us cover. Good luck out there in your trading. And remember, think outside the block.